Throughout human history, new and innovative ideas have brought to the table new methods of manufacturing and distribution for the world of business. One of the most integral of these remains to be communication and technology, a process whose inception, starting only a short half-century ago, changed the modern business landscape forever. For millennia, the change of products relied on local barter, word of mouth, and relationships between businesses and consumers. But during the Industrial Revolution, with the inception of larger corporations and new industries, a need was found for greater reach outside of communal means of communication. Newspapers, radio, and television became the next large steps on the world stage of marketing, providing a platform not only for products but historic events to be broadcast as political opponents set face-to-face in uncharted waters. Yet the most important means remained undiscovered. The date was August 6, 1991. Tim Berners-Lee released the first information into the public domain for a project he called the World Wide Web, derived from previous research he had completed for CERN, the European Organization for Nuclear Research. Although little noted at the time, this obscure project would become the basis for almost all communication in under a decade, and it did not take long for Lee's project to pick up steam, reaching unfounded levels of excitement and importance. In 1993, a new service known as HTTP spurred unprecedented levels of growth in technological markets, increasing computer ownership by over 20% in under 7 years, from a luxury to simply a necessity. This marked the beginning of the information age, but in addition, the dot-com bubble. The late 1990s featured the foundation of many technologically based companies including Craigslist, eBay, Match.com, MSN, and many more. Yet the jarring nature of the enthusiasm created by these new technologies was first seen in 1995 when Netscape Communications made an IPO, closing on the first day at $58.25 per share, leaving their company's value at over $3 billion. Only months later, Yahoo went public with one of the most successful IPOs in Nasdaq's history. Investors' desires to get in on the action had become apparent and the ball was set rolling. The only question remaining was when it would fall. Lower interest rates in the preceding decades, when combined with taxpayer relief, led investors to make more risky and speculative investments, and inflation was only heading upwards. By 2000, the Nasdaq index had risen over 400%, reaching a price-earning ratio of 200. Many large stocks rose up to 900% in value, yet company growth had stagnated. Public interest in personal investing became a main driving factor as many people quit their job to begin trading, and inexperienced investors dove headfirst into the market. Each and every startup felt IPO as a fundraising opportunity as money was thrown around left and right. On March 10th of 2000, the Nasdaq plummeted over 75%. Tech companies lost up to 80% of their value, and investors could only sit and watch. Speculative investing had finally caught up to its adherents. The fortunes spent on marketing over the preceding decades were suddenly rendered worthless, and physical infrastructure and production remained a saving grace for many companies, while many others such as Cisco and Intel fell out of favor. The dot-com crash in and of itself could be seen as a marketing ploy, as millions of investors were brought to the concurrent societal excitement of technology to make important decisions in misunderstood markets. Yet even greater marketing techniques were still to grow out of the internet's fallen spirit. For the technology industry, the 2000s were a period of rebirth. Facebook, Twitter, and Apple were the first to make an appearance on the world stage. Many corporations were hesitant to take a second dive into the technology markets, but those who were quick to jump on social media and smart technology were rewarded. The new fad became investments in interpersonal communications and advertising platforms, which quickly became a new favorite medium for younger generations. Blossoming out of this new evolution came a large growth in AI technology, its innovation, and its integration into the world of advertising. Data hygiene theory was the first to specify the importance of collection of data and effective sorting. This allowed focused and targeted advertising, saving companies money while simultaneously moving from a physical to an online presence. In the 2016 presidential election, Facebook offered all presidential candidates the service using data hygiene theory to successfully market campaigns. This allowed for Donald Trump to reach and unexpectedly win large portions of the Rust Belt. The movement to an online presence rendered many traditional polls trivial and gave a birth to a new form of advertising, not so dissimilar from the JFK-Nixon debate half a century earlier. The year is now 2019. The Nasdaq has exceeded its height during the dot-com bubble after a 15-year struggle. Tech companies are thriving, and corporations are moving physical asset value online yet again. Only one question remains: when will the bubble burst next?